So this is the pound dollar analysis for Tuesday, 19th of December. Now let's have a look what have been the prices in the past and see if we can successfully project where they might go ahead in the future. So we came down to sorry sell off just here, and we came down towards this 3304. We caught a bit at 3304, this weekly level marked out here in blue. We've successfully navigated 3350, which was our major level, and we went all the way up to 3429, which was the next major level in our to the upside. So we did trade quite a bit above the major level at 34.29. We traded all the way up into the 34.60s, and we weren't able to see the continuation towards 34.88. Instead, we did see some, I think we had a Bank of England decision on this candle just there. Instead, we did see a bit of a pullback down to 200 period moving average. Prices did catch a bit of a bid, but went into a bit of a consolidation. Again, we didn't see the buy side momentum coming off that 34.29 for a springboard towards our 34.88. We did see the subsequent breakdown of prices, quite a sizable breakdown in prices. And from the breakdown, we didn't see much of a reaction around at 33.50. We came all the way down to the weekly level in around weekly level in around 3304, similar to how we did over here on your left. I've just marked it out. So over here on your left, we came all the way down to 3304 again, formed a bit of a double bottom. We did see some buy side momentum come into the market, had a brief consolidation, not for very long, around 3350, and we've had a move through the 200 period moving average. Now we did have this strong momentum come up, and we didn't come quite. Let me word it differently. So we had the momentum come up. We did break above the 400 period moving average. We didn't see the continuation up to 34.29. What we did see was a somewhat prices did stop in around 34.29, and we have seen a breakdown below this 400 period moving average, currently going below the 200 period moving average now. We've been consistent in this slight downtrend here. The sell-off has been quite consistent, but the candles are quite small in terms of the body, especially in comparison to those on your left. I'm just marking out there. They are pretty small in comparison. So would suggest that this might be a retracement rather than a reversal. Usually the size of the candles usually give an indicator of whether it is likely, candles in a series, whether it is likely a reversal or a retracement. Usually smaller candles are indicative of retracements. Now, we are seeing somewhat consistent candles to the downside, and again, they are quite small. So what we might see is price come down towards our 33.68 before we catch a bid. We've had a break and a move up towards 34.29. Below 33.68, where we appear to be heading at the moment, we're currently 7 pips away from there. We're looking at 33.50 again. We're looking for buy side momentum to come into the market, take us up to 34.29, beyond which we're looking at 34.88, and above that we're looking at 35.20, which is essentially this high over here to your left. Now, again, if we don't catch a bid around 33.68 or around 33.50, again to the downside, we would be targeting. It would become a reversal in that case. But we'll definitely be targeting that 33.04. Now, to see if it does hold. Now, this would be the third time it would be tested over a pretty short period of time. We might actually see a breakdown, but we'll look to see if we do see buy side momentum come into the market to test 33.50, 33.68, beyond which we're looking at 34.29. If we do get down to 33.04. If we were to break down below 33.04, the very next major level that we'll be looking at is 32.81. 32.81. It's currently about 100 or so, well, just less than 100 pips away. 32.81, and a break from there if it depends on market volatility. If we do get quite a bit of volatility, I suppose the level below that we will be looking at is, it wouldn't come into focus, I'd think 32.20. 32.20 from where we are at present, we would require a very strong catalyst to get down to 32.20, but 32.81, possibly the far end of the range, depending on market volatility. Again, to the upside, we've mentioned levels that we are looking at, possible far end of the range being around at 35.20. And before we wrap up here on the pound dollar, we'll just have a look at the daily chart. So just bear with me a second here. While I head over to the daily chart. So if I head over to the daily chart and get scale on here correct. Well, on this daily chart, we've had this move to the upside. We had this range that we broke from. We've had this sell off. We've got our highs of 2017 so far, 36.57. Now, the thing about where we are, there's a degree of it. It's what we see here is we're in a bit of a down channel at the moment. There's a degree of indecisiveness. We have large up days, large down days. So there's a degree of indecisiveness. We aren't trending. It's pretty clear. Even though we're slightly heading to the downside, there's a degree of indecisiveness in the market. So we're potentially waiting for likely Brexit negotiations. That's the reason we're seeing this price action. But what we could see is further breakdown before we have a break to the upside, or we'll have some moment. Well, I suppose it's easy to say, oh, it's either going to go up or down. But what we likely see is further retracement downwards, possibly down towards these 32.20, 31.47 before we see bullish buy side momentum to take us possibly up to 35.20, possibly up to 36.57. But at the moment, it is difficult to say where to go on this daily chart due to the fact that there is a degree of indecisiveness in how price is playing out. And with that said, that's up the pound dollar analysis. Thanks for watching.